In a trend, candlesticks usually stick to the upper Bollinger Band and the midline. In a really strong trend, they rarely go below the midline. When a trend is about to end and consolidation is about to start, the first significant drop often touches the bottom Bollinger Band almost perfectly. Once the price touches the bottom Bollinger Band, the drop usually stops. Traders see this happening frequently. It's like a good check of the bottom of the Bollinger Band. This often leads to a quick bounce and a return to previous highs, just like you can see in this chart. Trends don't change direction abruptly. Usually, they pause for a moment before continuing in the same direction or entering a consolidation phase. As traders, we search for opportune moments to enter these trends, and these pullbacks are often valuable opportunities. The first significant drop, where the stock consistently bounces off the bottom Bollinger Band, happens because Bollinger Bands indicate the potential range of price movement at any given time. They expand and contract based on volatility. While Bollinger Bands don't predict future prices with absolute certainty, they provide a visual estimate of how much price could potentially move. So, when we see a pullback to the bottom Bollinger Band, it represents the maximum extent to which the price could have dropped. In theory, this becomes an ideal point to enter for a bounce and a continuation of the trend. Entering the market during any pullback can be risky. It's challenging to determine if the stock has truly reached the bottom when it touches the bottom Bollinger Band. In the example above, the stock initially touched the band, creating a wick, but the following day, it continued lower before finally reversing or bottoming out. If you bought on the first touch and saw the stock decline the next day, it might have caused confusion and frustration. This happens when you buy too early without confirmation of the actual bottom. The key lesson here is to be patient. Waiting for confirmation pays off in the long run. The most secure approach in navigating this market move is to wait for solid confirmation that the stock has indeed bottomed and is on its way to the mid-Bollinger Band. This confirmation can manifest in various ways, such as irregular volume, a gap up the following day, confirmation from indicators, specific candlestick patterns, candlesticks with wicks, and more. The key strategy in handling pullbacks is to set a stop loss at the lowest point of the move, allowing for some flexibility. This approach helps manage risks effectively in volatile situations. Entering this setup can be challenging. The riskier entry point is at the first touch of the Bollinger Band, but it's uncertain if the stock bottoms out at that point. A more favorable entry point is when the stock stops making new lows. This can be indicated by a gap up, a bottoming candle, a green candle, or other similar signs. Waiting for such confirmation provides a more reliable entry opportunity. Placing the stop loss is essential for managing risk. It's advisable to position it below support for long positions or above resistance for short positions. The extent of risk undertaken by traders depends entirely on their assessment of potential profits. This aligns with the principle of balancing risk and reward in trading decisions. For short-term goals, targeting the mid-Bollinger Band or the 50% retracement of the previous move is often effective. In the midterm, aiming for the previous highs or a 100% retracement of the preceding move can be a strategic target. Long-term objectives involve riding the trend until it weakens, allowing for sustained gains over an extended period. These targets help traders set clear expectations for different timeframes in their trading strategies. Thank you for joining me today. I trust you found the insights in this video helpful. Should you have any questions or need clarification on trading matters, feel free to reach out via WhatsApp this number. If you've enjoyed what you've seen and want to stay in the loop for more trading wisdom, be sure to hit that subscribe button and turn on notifications. Your support fuels the growth of this channel. Stay tuned for my next video, where we'll delve into another intriguing aspect of the trading world. Until next time, happy trading!